Imagine you are running a business that makes roughly $180 million.
Okay.
Every single day.
Which is just, it's a staggering amount of money.
Right, it's huge. But now imagine knowing that in exactly 3 years, the government is going to step in and allow anyone in the world to legally copy your core product.
Oh, wow.
Yeah, and not just copy it, but sell it for pennies on the dollar.
Yeah, that is a terrifying level of pressure.
Exactly. And welcome to our deep dive. Because today, that is exactly what we're looking at. We're breaking down the Q4 2025 earnings call from pharmaceutical giant Merck Co.
And, you have this massive corporate machine, right, operating at absolute peak efficiency, generating this unprecedented cash flow. But the executives in the room, they can see this cliff approaching on the horizon.
A patent cliff.
Right, the patent cliff. And this entire earnings call, if you really read between the lines, it's essentially a masterclass in them trying to convince their investors that they can build an airplane before they drive off that cliff.
Which is why we're doing this deep dive for you today. Because if you think an earnings call is just, a dry, hour-long readout of financial metrics and spreadsheets, you are missing the real story.
Totally.
These calls are literally the blueprints for the future of global healthcare. We are taking this massive stack of corporate data and extracting the nuggets of insight that will make you the most well-informed person in the room regarding exactly where medical science is heading.
Because the stakes here, they really could not be higher. You've got Merck balancing this massive, almost unprecedented current success with, like you said, an existential threat.
Right.
How does a company that pulls in $16.4 billion in a single quarter prepare for a future where its biggest cash cow is just, suddenly going to face generic competition?
Right. They can't just sit on that cash.
Exactly. They are forced to take those billions and deploy them immediately into everything from, groundbreaking eye disease treatments to once-a-season flu antivirals.
So we aren't just looking at spreadsheets today. We are tracking the capital. We are going to see how a pharmaceutical giant essentially goes shopping for new cures.
And how they re-engineer entirely new delivery methods just to protect their patents.
Yes. And what this multi-billion-dollar defensive strategy means for patients living with HIV, cancer, and heart disease. So let's start with the sheer scale of the present moment, that $16.4 billion quarter.
Yeah, let's get into the numbers. Because when their chief financial officer, Caroline Litchfield, presented that scorecard, which was a 5% increase year over year, by the way, the market definitely paid attention.
5% on a base that big is huge.
It's massive. But the absolute undisputed king of this revenue stream is the Keytruda family of oncology products.
Oh, absolutely.
It brought in $8.4 billion alone in Q4, growing at 5%. Just think about that. More than half of all the money flowing into this massive multinational corporation is coming from one single brand.
And what stands out to me is the strategy behind that specific growth. Keytruda is a PD-1 inhibitor, right?
Right.
It's an immunotherapy that basically takes the brakes off the immune system so it can fight the cancer.
Yeah.
We've known it works for years, but the growth we're seeing now isn't just organic, it's highly, highly engineered.
Yeah, they are very deliberate about it.
The management team highlighted robust uptake in earlier stage cancers, specifically tumors that primarily affect women, so breast, cervical, and endometrial cancers.
And that shift moving to earlier stage treatment is just a brilliant, aggressive commercial strategy.
How so? Like clinically speaking?
Well, historically, these incredibly heavy-hitting immunotherapies, they were reserved for metastatic disease, like the last line of defense when everything else failed.
Right, when the cancer's already spread.
Exactly. But moving up the treatment paradigm into early stage disease means you reach patients when their immune systems are actually more robust. They're more capable of responding to the drug.
Which is great for the patient.
Obviously. But from a financial perspective, it also means patients are on the therapy much, much longer. You are expanding the patient pool and the duration of the therapy simultaneously.
Okay, that makes complete sense. If you have an asset that works, you want to use it before things get dire. And they noted this global demand is strong enough to easily absorb, I think they said, a $200 million headwind from U.S. purchasing timing.
Yeah, a minor blip for them.
But Keytruda wasn't their only winner. Welireg, which is their treatment for advanced renal cell carcinoma, That grew by 37%.
Wow.
Hitting $220 million. And then there's the animal health division, which delivered 6% growth.
You know, animal health is really the silent engine in Big Pharma.
Is it? I always kind of skip past that part of the report.
Oh, you shouldn't. Merck saw a 9% growth in livestock demand globally. It perfectly illustrates the macroeconomy of a company this size.
Because everyone still has to eat, right?
Exactly. They noted that companion animal sales, so, dogs and cats, those went flat because in a tight economy, people are taking fewer trips to the vet.
That makes sense. I definitely put off my dog's dental cleaning this year.
Right, exactly. But the global industrial demand for livestock protein, that keeps the overall segment growing. It effectively hedges against domestic economic downturns.
Yeah, it's fascinating. But I do want to push back on the idea that this was a flawless quarter for Merck. Because there are some serious structural cracks in this $16.4 billion foundation.
Oh, for sure. It wasn't all sunshine.
The most glaring one was Gardasil, the HPV vaccine. It saw a massive 35% decrease globally.
Yeah, that was a steep drop.
It pulled in $1 billion, but that drop was entirely driven by lower demand in China and Japan. And then you have Capvaxive, their pneumococcal vaccine, which only brought in $279 million.
Which is quite a bit lower than expectations.
And plus, their new RSV drug faced severe constraints right out of the gate. They cited low infant immunization rates and a glut of market inventory.
Right. And that international drop for Gardasil was indeed severe. And the RSV rollout, it's a stark reminder that having a good drug doesn't guarantee a successful launch.
Because of the logistics.
Yeah, if the market logistics like inventory gluts or public health messaging aren't in your favor, the drug just sits there.
Right. But let's look at how they are papering over those cracks. Litchfield noted that Gardasil sales in the U.S. actually grew by 7%.
True.
But she admitted this U.S. growth was largely due to price increases, not an increase in the actual volume of vaccines being administered.
Right. They just charged more for the same amount of product.
Exactly. So my question to you is, if Keytruda is this massive tentpole holding up the entire circus, and your other major pillars are stumbling globally, and you're masking domestic stagnation by just jacking up the price, how fragile is this operation?
It is a critical vulnerability. Wall Street differentiates very sharply between true demand-driven growth and price-driven growth.
Break that down for us.
Sure. So true demand-driven growth, like Keytruda moving into early-stage breast cancer, that means your product is actually capturing new market share. More people are using it.
Right.
Price-driven growth, on the other hand, is a lever you can only pull so many times until the healthcare system pushes back, or until competitors just undercut you.
It's like a restaurant that's losing foot traffic, but they're staying afloat by charging $25 for a burger.
Exactly. Eventually, people just stop walking through the door. If you rely on price hikes to mask falling volume, you're essentially borrowing against your own future.
And Merck's management has to know this better than anyone, right?
Oh, absolutely. They aren't treating the $16.4 billion quarter as some sort of permanent victory. They know these revenues are merely funding the solutions for their impending crisis.
The LOE.
Right, the loss of exclusivity.
The dreaded patent cliff. Because listening to this call, they spent a lot of time outlining a very, very stormy 2026.
Yeah, they are projecting a $2.5 billion headwind right out of the gate for 2026.
$2.5 billion? Just gone.
And this is from generic competition hitting the Januvia family of diabetes products. Also Bridion, which is an anesthesia reversal agent, and Deficit.
Okay, so that's a bunch of drugs losing their monopoly.
Plus, they're also factoring in the impacts from the Inflation Reduction Act's Medicare price setting in the U.S. And on top of that, soft demand for their COVID-19 antiviral Legevrio.
Okay, so you have $2.5 billion evaporating from the balance sheet. But as bad as that sounds, that is just a warm-up act.
Oh, completely.
The main event is Keytruda's LOE. We just established that Keytruda is more than half their revenue. When exactly does that golden goose lose its armor?
Well, the consensus target for Keytruda's LOE has long been 2028. But during this call, management engaged in some really fascinating legal maneuvering. They suggested they might extend that exclusivity to May or even November of 2029.
Wait, I need to understand the mechanics of that. because you don't just get to arbitrarily tell the FDA and global regulators, hey, we'd like an extra 18 months on our monopoly, thanks.
No, you definitely don't. It requires an absolute masterclass in navigating patent thickets.
Okay, walk me through it.
So the original compound patent, like the IP for the actual physical molecule of Keytruda that expired back in December 2021.
Wait, really? It's already expired?
Yes. But Keytruda is a biologic, and biologics are incredibly complex. They aren't just chemicals mixed in a beaker, they are grown in living cells.
Right.
So Merck has a method of making patent. This protects the specific proprietary manufacturing process that they use to cultivate and purify the drug. And that patent extends to May 2029.
So even though the recipe is public, the specific oven they use to bake it is patented.
Exactly. Good analogy. And then they have a method of use patent, which covers the specific clinical administration of the drug. And that one extends to November 2029.
Wow.
And management started that recent evolutions in case law have significantly boosted their confidence that they can actually defend these secondary patents against generic biosimilars.
So they're essentially throwing up this massive legal fortress around the manufacturing and administration processes.
Yeah.
And I mean, when you were making $8.4 billion a quarter on a drug, an extra year of exclusivity is worth what? Over $30 billion in top-line revenue?
Yeah, easily. It is a massive financial buffer. But it doesn't change the ultimate reality.
The cliff is still coming.
The cliff is still coming, whether it's 2028 or 2029. And this is exactly why CEO Rob Davis went on the offensive during the call, making an incredibly bold claim.
Right, I heard this.
He stated Merck now has a line of sight to over $70 billion of potential commercial opportunity by the mid-2030s.
$70 billion. I have to call a timeout here. He emphasized this is $20 billion more than they projected just a year ago. And it's more than double the consensus 2028 peak revenue of Keytruda.
Right.
He claims 10 of these new programs will be clinically de-risked over the next 2 years. But as an observer looking at the pharmaceutical landscape, how much of this is realistic forecasting and how much is just throwing a massive shiny number at anxious shareholders who are terrified of 2028?
Your skepticism is completely valid, and it's shared by a lot of institutional investors because a potential commercial opportunity is basically a financial ghost.
It doesn't exist yet.
Right. It assumes phase 3 clinical trials succeed. It assumes regulators approve the drugs without those terrifying black box warnings. It assumes doctors actually prescribe them over entrenched competitors. And it assumes payers agree to reimburse them.
That is an extraordinary sequence of ifs.
It's a mountain of ifs.
Right. But even with potential patent extensions, Merck can't just cross their fingers and hope their internal R&D labs invent a $70 billion miracle by 2029. They have to buy time, literally.
Literally buy it, yes.
And we saw exactly how they are doing that with their aggressive business development strategy.
Yeah, the shopping spree. During the 2026 guidance, CFO Caroline Litchfield just casually dropped the detail that they are taking a $9 billion one-time charge.
$9 billion.
$9 billion related to the acquisition of Sedera Therapeutics. And they also recently acquired Verona Pharma, which brought in O2VR, which is a maintenance treatment for COPD.
And that one is already generating cash, right? I think it pulled in $178 million in Q4.
Yes, Verona is a very solid immediate revenue play. But the Sedera acquisition is the really interesting one.
Yeah, let's dig into Sedera. Because you don't drop $9 billion unless you think you are buying a paradigm shift.
Exactly. The asset they acquired from Sedera is called MK1406. It was formerly known as CD388. It is a potentially first-in-class, long-acting, strain-agnostic antiviral designed to prevent influenza in high-risk groups.
Okay, strain agnostic is the key phrase there. Let's break down why that matters clinically for you listening. Every year, traditional flu vaccines require public health officials to basically make an educated guess.
Right. They have to predict which influenza strains will dominate the upcoming winter.
They formulate the vaccine based on that guess. And if they guess wrong, the efficacy of the vaccine just plummets.
Exactly. Because a traditional vaccine presents a tiny fragment of a specific viral strain to your immune system, asking your body to build antibodies against it.
So it's like showing a wanted poster to the immune system.
Perfect analogy. But MK1406 operates on a completely different mechanism. It doesn't rely on your immune system's memory at all. And it doesn't care about the specific surface mutations of this year's flu strain.
So the wanted poster doesn't matter?
Nope. It attacks a highly conserved fundamental structural component of the influenza virus that just does not mutate from season to season.
Ah, wow. So it's an antiviral shield, not an immune prompt.
Precisely. And it's designed to be long-acting. The clinical vision here is a single preventative dose that provides neutralizing coverage for the entire flu season.
A whole season from one dose.
Yeah. They are currently running the phase 3 Anchor study. They finished enrollment in the Northern Hemisphere right during peak winter, and now they're enrolling in the Southern Hemisphere. They want to prove it works against diverse, year-round circulating strains.
Think about the target population for this. If you have an elderly patient or someone undergoing chemotherapy or an organ transplant recipient, their immune system is compromised.
Highly compromised.
You can give them a traditional flu vaccine, but their body might not have the cellular resources to actually mount a defense. MK1406 just bypasses their weak immune system entirely and neutralizes the virus upon entry.
And Rob Davis stated they see a revenue potentially greater than $5 billion for this specific drug.
$5 billion. But when you map out the global population of immunocompromised adults, that figure starts to look highly, highly credible.
Oh, easily.
You know, it reminds me of legacy tech giants operate. Like Apple or Google, they don't always build new technology from scratch. They let nimble Silicon Valley startups take the initial failure risk.
Right, let the startup prove it works first.
Exactly. Merck essentially outsourced their R&D risk. They let Sedera spend the years proving the concept of a strain-agnostic antiviral. And once the data looked promising, Merck used their massive $16 billion a quarter war chest to just swallow them whole.
Yep.
And now they can use their global infrastructure to run the massive phase 3 trials and prepare for global distribution.
It really is the defining strategy of modern big pharma. You acquire partially de-risked assets to fill your pipeline. But acquisitions alone aren't going to build a $70 billion bridge to the 2030s.
Right, you need in-house wins too.
Yes. Merck's internal labs are also attempting to fundamentally rewrite the biological rules for some of the most complex chronic diseases, particularly in the heart, the lungs, and the immune system.
Okay, I want to pivot to something Dr. Dean Lee, the president of Research Labs, spent a suspicious amount of time hyping up. Winrevair for pulmonary arterial hypertension, or PAH.
Yes, Winrevair.
It pulled in $467 million, which is great.
Yeah.
But he was comparing it to the ACE inhibitor revolution for heart failure. Is that just, executive hubris, or is the biology actually that groundbreaking?
And no, the biology actually warrants the hype.
Really?
Yeah. So PAH is a brutal progressive disease. The blood vessels in the lungs physically thicken and narrow, which forces the right side of the heart to pump furiously against extreme resistance.
It's like trying to pump water through a concrete tube.
Exactly. And it inevitably leads to heart failure. Now, for decades, the standard of care has been vasodilators. These are drugs that simply try to force the vessels open.
Just widening the pipes.
Right. But Winrevair targets the activin signaling pathway. It doesn't just widen the pipes. It fundamentally alters the cellular signaling to stop the vessels from proliferating and thickening in the first place.
Oh, I see. So it's true disease modification versus just symptom management?
Yes. And they just released top-line findings from the Cadence study. It showed Winrevair hit its endpoints for an entirely new patient group, people whose pulmonary hypertension is caused by left heart disease, specifically heart failure with preserved ejection fraction.
Okay, and if regulators allow them to expand the label to that population, the market size for this drug absolutely explodes.
It's a massive expansion.
Staying in the cardiometabolic space for a second, they also presented phase 3 data from the Coral Reef study. This is for a drug called elicitide.
Right, the oral PCSK9 inhibitor.
Now, I know PCSK9 inhibitors are incredibly powerful cholesterol drugs.
Yeah.
But why is making it an oral pill such a big deal?
Well, we have to look at the mechanism. PCSK9 is a protein in the liver that degrades LDL receptors. You want those receptors because they are the things that pull the bad LDL cholesterol out of your bloodstream.
Okay.
So by inhibiting PCSK9, you allow your liver to recycle those receptors and drastically lower your cholesterol. Current PCSK9 inhibitors are phenomenal drugs, but they are monoclonal antibodies. They have to be injected.
Ah, because if you swallow a monoclonal antibody, your stomach acid just digests it like a piece of steak.
Exactly. It just gets destroyed. Elicitide is a marvel of chemical engineering because it delivers that incredible antibody-like efficacy in inhibiting PCSK9, but in a simple, once-daily pill.
That is wild.
The coral reef trials demonstrated statistically significant reductions in atherogenic factors across broad populations, including patients with genetic hypercholesterolemia.
And cardiovascular disease remains the leading cause of death globally. Shifting a highly effective injectable therapy into a daily pill, that fundamentally changes the global paradigm of heart health management.
It's all about changing the delivery mechanism to reduce patient friction. If it's easier to take, more people will take it.
And nowhere is this theme more radically apparent than in their HIV pipeline. The updates here completely blew my mind.
Yeah, Merck is heavily pushing a next-generation compound called islotravir. They announced data for a daily combination of islotravir plus durabirine. The key differentiator here is that this two-drug regimen does not use an NSTI backbone.
Okay, let's translate that for everyone. An NSTI is an integrase strand transfer inhibitor, right? Which is basically the foundation of current gold standard drugs like Biktarvy. What does an NSTI actually do, and why is Merck trying to avoid it?
Good question. So an NSTI blocks the HIV virus from inserting its viral DNA into the DNA of the host's CD4 cells. It is highly, highly effective at stopping viral replication.
Okay, so why move away from it?
Because long-term use of NSTI has been strongly associated with significant metabolic side effects, most notably unexplained excessive weight gain and insulin resistance in a lot of patients.
Which obviously causes a whole host of other health issues over time.
Exactly. So Merck's islotravir combo bypasses the integrase enzyme entirely. It offers a highly potent daily option that avoids those metabolic complications.
That is a significant clinical win. But honestly, that wasn't the part that stopped me in my tracks when reading this report.
So let me guess, the dosing schedules.
Yes. They are testing islotravir combined with Gilead's lenacapravir as a once-weekly oral treatment. And they are developing MK-8527 as a once-monthly oral pre-PEP, pre-exposure prophylaxis.
A weekly pill for treatment and a monthly pill for prevention.
Just think about the profound psychological impact of that delivery method. If you are living with HIV, taking a pill every single morning is a daily reminder of your status.
Yeah.
It's a daily risk of someone seeing your medication on the bathroom counter. It requires a rigid routine that can be disrupted by travel or stress or just forgetting. Moving to a once-a-week treatment or taking a preventative pill just 12 times a year that completely alters the lived experience of the disease.
It reduces the stigma drastically.
And it improves medication adherence.
Which is huge because medication adherence is the single biggest hurdle in managing chronic infectious diseases. A weekly or monthly oral option isn't just a convenience, it is a monumental leap in public health strategy. It will keep viral loads undetectable across much broader populations. And this overarching strategy, innovating the delivery mechanism to improve patient experience and defend market share, that is the exact playbook Merck is using to protect its oncology empire.
Right. Let's dive into that defensive playbook because what they are doing in oncology to prepare for 2028 is wild. They are heavily investing in combinations, specifically pairing Keytruda with ADCs, antibody-drug conjugates.
Yes.
They highlighted the phase 3 Keynote B15 study, which combined Keytruda with an ADC called Padcev for muscle-invasive bladder cancer.
And the results there were remarkable. Used perioperatively so, before and after surgery, this combination demonstrated statistically significant improvements in event-free survival and overall survival compared to the current standard of care.
Now, ADCs are basically the hottest property in oncology right now. And I want to explain the mechanism here because it's brilliant. If traditional chemotherapy is like a carpet bomb that destroys healthy cells alongside cancer cells, an ADC is a laser-guided smart bomb.
Exactly.
But the most fascinating part isn't just the targeting system. It's the linker technology.
The linker is the absolute secret sauce of an effective ADC.
Right, because an ADC has three parts. You have the antibody, which acts as the homing beacon, hunting down a specific protein found only on the cancer cell.
Right.
You have the toxic chemotherapy payload, and connecting them is the chemical linker. Think of the linker as a biological padlock. The toxic payload flows harmlessly through your bloodstream, locked up tight, completely ignoring healthy tissue.
Which eliminates so many side effects.
Yes. And it only unlocks when the antibody attaches to the cancer cell and the entire molecule gets swallowed inside the tumor. Only the specific acidic environment inside the tumor cell can dissolve that padlock, detonating the chemotherapy directly inside the target.
It maximizes the destruction of the tumor while vastly minimizing the systemic collateral damage to the patient's body. It's incredible science. And Merck is making a staggering financial bet on this technology.
Oh, staggering.
Well, Dr. Lee discussed SACT-TMT, their investigational TROP2-directed ADC. They are so confident in this specific drug that they are currently running 16 different phase 3 studies simultaneously.
16 concurrent phase 3 trials for a single asset. I mean, that is an astronomical burn rate of capital. Phase 3 trials cost tens, sometimes hundreds of millions of dollars each.
Oh, yeah. It is a massive financial gamble. When analysts actually challenged Dr. Lee on their strategy compared to entrenched ADC competitors like AstraZeneca and Daiichi Sankyo, he basically pointed to those 16 studies as proof of their conviction.
Like, we wouldn't spend this much if we didn't know it worked.
Exactly. They view SACT-TMT as a workhorse ADC, something capable of blanketing the entire oncology landscape, lung cancer, breast cancer, you name it.
They're also looking beyond traditional chemicals. They discussed their collaboration with Moderna on the Keynote 942 study. This is an individualized neoantigen therapy, essentially a personalized cancer vaccine.
Yeah, this crossover is fascinating. They are evaluating Moderna's personalized mRNA vaccine in combination with Keytruda for patients with high-risk melanoma following surgery.
And the data.
The 5-year follow-up data showed a 49% reduction in the risk of recurrence or death compared to using Keytruda alone.
A 49% reduction at 5 years for melanoma. I mean, that is life-changing data.
Oh.
But I want to look at another oncology update that I think really reveals the cynical brilliance of Merck's business strategy.
Oh, I know where you're going with this.
They just received approval in Europe for subcutaneous Keytruda, or Keytruda SC.
Yes, shifting from a lengthy intravenous drip to an injection under the skin that takes 1 to 2 minutes.
Right. Now, from a patient perspective, it's wonderful, right?
Yeah.
You get your afternoon back instead of sitting in a cold infusion chair for an hour. But let's look at the true life cycle management strategy here.
The business angle.
The business angle. The subcutaneous injection mechanism is patented separately from the core Keytruda molecule. So when 2029 rolls around and cheap, generic IV versions of Keytruda hit the market, Merck will have already transitioned the entire market to the subcutaneous version.
It creates an incredibly sticky defensive moat.
Exactly. Think about it. If you are an oncology clinic in 2029, your margins are tight. Merck comes in and says, hey, you could use the generic IV drip, which ties up your clinic chair and your nursing staff for an hour per patient. Or you can prescribe our patented Keytruda SC. It takes 2 minutes.
Right.
You can cycle triple the number of patients through your clinic in a day. Which one is a hospital administrator going to mandate?
The 2-minute shot every time.
Every single time. It isn't just about patient convenience. It's about protecting market share by optimizing the clinic's throughput.
It perfectly captures the intersection of medical innovation and corporate survival. It really does. But oncology wasn't the only area where they are trying to redefine the standard of care to build that $70 billion pipeline. We also have to examine their move into ophthalmology.
Eye care is a massive market. They spotlighted an investigational drug called MK3000 for diabetic macular edema, or DME, and wet age-related macular degeneration.
Right.
There are 1.6 million DME patients and 1.5 million wet AMD patients in the U.S. alone. It's a $15 billion market.
And it is currently monopolized by a single class of drugs. VEGF inhibitors, vascular endothelial growth factor inhibitors.
Is that 5 times fast?
Right. But these drugs are highly effective for many. However, 30 to 40% of patients have suboptimal responses. Their vision continues to deteriorate because the underlying disease pathology is just so complex.
Right. And from what I understand, MK3000 operates on a completely novel mechanism. It's a WNT agonist. But, WNT agonist is a great piece of jargon. What does it actually do biologically?
Okay, let's break it down.
If standard VEGF inhibitors just soak up the proteins, causing leaky blood vessels in the eye like a sponge, how is this different?
Well, the WNT signaling pathway is essentially the cellular blueprint system that tells the body how to build and maintain blood vessel walls in the first place.
Okay.
In diseases like DME, the vessels in the retina become unstable and they leak fluid, which causes blindness. So while VEGF inhibitors act like a bucket catching the drip, a WNT agonist goes to the source.
It fixes the pipes.
Yes. It activates the genetic signaling that tells the eye to build tighter, stronger, more stable vascular walls from the start. It is structural plumbing repair rather than just managing the leak. It is literally the first truly new mechanism of action in this space in 2 decades.
Wow. So if they can capture the 40% of patients who are failing standard therapies, or even combine MK3000 with existing VEGF inhibitors for a dual action approach, that is a multi-billion-dollar asset hiding in plain sight.
Exactly. And this brings the entire narrative of the earnings call full circle, really. This is how you construct a bridge over a patent cliff. Every single cent of profit from that $16.4 billion quarter is being aggressively deployed into these highly calculated concrete pillars.
The 16 concurrent phase 3 trials for the SACT-TMT smart bombs, the $9 billion acquisition of the MK1406 once-a-season flu shield,
Right.
the structural WNT agonists for blindness, the weekly and monthly HIV pills.
All of these components are meticulously designed to validate Rob Davis's claim of a $70 billion commercial opportunity by the mid-2030s.
It's a breathtaking balancing act. On one hand, you have the raw, relentless pressure of Wall Street demanding constant growth, heavily discounting the company's future because of a date circling on a calendar in 2029.
Yeah.
But on the other hand, you have the messy, complex, and deeply human endeavor of trying to actually cure diseases that have plagued us for centuries.
And that is the ultimate takeaway from our deep dive today. Merck serves as an absolutely fascinating case study of a titan at a crossroads. We looked at the sheer scale of their current operations, which are anchored by the dominant $8.4 billion force of Keytruda.
Right.
We saw how they're strategically defending that oncology empire with personalized mRNA vaccines and rapid, highly defensible 1-minute subcutaneous injections.
And we watched them execute a $9 billion acquisition strategy to capture the future of respiratory care while pushing the absolute boundaries of pharmacology in their internal labs.
Trying to shift the paradigm of treatment from daily pills to weekly doses, and moving from reactionary medicine to powerful, long-acting, strain-agnostic preventatives.
The real insight for you, the listener, is realizing that these corporate earnings calls dictate the future of human health.
They really do.
The timeline for a patent expiration discussed in a corporate boardroom directly dictates the urgency, the funding, and the strategy with which a new life-saving cancer drug or a revolutionary flu preventative actually reaches your local pharmacy.
Because at the end of the day, highly commercialized science is still science that saves lives.
It is. And that leaves us with a lingering, provocative thought for you to mull over. As we look at the success of the Moderna personalized cancer vaccine trials, the shift toward weekly or monthly HIV treatments, and a single shot that protects you from the flu all winter, regardless of the strain.
Yeah.
Are we moving away from an era of treating disease daily?
Are we entering an era where we simply, update our immune systems periodically?
Exactly.
Yeah.
Much like downloading a software update for a smartphone.
Yeah.
You plug it in, you get the latest security patch for the seasonal flu or the specific genetic mutation in your body, and you go about your life. How will this biological software update model redefine what it means to be a patient in the 2030s?
It's a wild thought.
When we look back at the blueprint of these corporate earnings calls, we might realize that the future of medicine isn't just about finding new cures. It's about entirely redesigning how we experience health in the real world.